Global cryptocurrency market has suffered its worst crash of this year. The crypto market has tumbled below $1 trillion, down from a peak of close to $3 trillion just 7 months ago in what appeared to be a catastrophic downfall for the digital asset space. This particular crash is reminiscent of similar market corrections in 2013 and 2017, which saw Bitcoin's value drop by more than 80%, with just over 60% wiped from Bitcoin's November price peak, and with the market still yet to settle. Some analysts fear more losses may be on their way. Hello and welcome to Smart Tech Ideas. In today's video, we will talk about the most recent crypto crash, what caused it, and where is the entire space going from here onwards. Make sure to stick around till the end of this video, where we will update you with the expert opinion about cryptocurrency's volatility and how much worse a sell-off could get. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video. The latest crypto sell-off appeared to begin when U.S. inflation data was released on Friday, revealing a rate of 8.6% year-on-year in May, an unexpected increase from April that caused investors to shift their funds from traditionally riskier assets like crypto and tech stocks. These losses were then compounded by the announcement from crypto lending platform Celsius that it was halting customer withdrawals on Monday, citing extreme market conditions. It contributed to Bitcoin losing more than 15% of its value in just 24 hours, while also causing Celsius-owned cryptocurrency to plunge by more than 80% in price. Additionally, last month saw two much lower profile but nonetheless significant coins collapse, and this knocked a lot of confidence in the market overall. Experts say this is because of the wider global climate. It's not just in the crypto world things are not looking good. Recession looms, inflation is soaring, interest rates are rising, and living costs are biting. Stock markets are wobbling too, with the US S&P 500 now in a bear market. As a result, even the big investors are less free with their money. And many ordinary investors, not rich hedge fund owners or corporations, but people like you and us, have less to invest in anything. For many, an investment in something as volatile and unpredictable as cryptocurrency feels like a risk too great in these times. As a result, people are increasingly deciding to sell up. The more people sell, the less Bitcoin is worth, because that's how it works. Its value is pegged to its desirability. This has a knock-on effect of more people selling because they can see the value going down, and the cycle continues. Unlike other more traditional assets, Bitcoin has no intrinsic value to underpin it. There's no bricks and mortar, revenue stream, or underlying business. The price is only and purely whatever people are prepared to buy it from you for. That's when it gets scary for people, because if enough people head for the exit, there's no floor. There's nothing to stop it trading at $10,000 tomorrow if enough people give up or are forced to sell. But why right now? So that's the already difficult backdrop for Bitcoin, and then the last few days saw these developments. Binance, the largest global crypto exchange, paused all Bitcoin withdrawals for a few hours. It said this was due to a stuck transaction, although not everybody believed it. The crypto lender Celsius did the same, but it cited extreme market conditions rather than technical difficulties. And now, the Coinbase exchange has just announced it is laying off 18% of its workforce, blaming, in part, the crypto winter. The first two caused panic. Imagine if you suddenly couldn't withdraw cash from your bank, or you heard other people couldn't. You'd be at the nearest cash machine, along with everybody else, in record time, and this in itself would create more upheaval and more panic. So what can turn things around? In a nutshell, in order to stabilize it, people who still have Bitcoin would need to hold on to it, and others would need to start buying it again. This has happened before. Crypto fans will tell you now is a great time to buy because it's cheap, and you then have to sit tight and watch it turn the corner. This is how it's always worked. The persuasive stories of those who have got rich quick and the high-profile celebrity endorsements do attract new money. Many investors see Bitcoin's price swings as part of the game, although volatility is tough for individual investors to deal with, but most experts warn against selling too fast. Recent price fluctuation has followed surging inflation, ongoing uncertainty over the country's lingering fight with COVID-19, and new regulatory actions by the U.S. government, including Biden's recent executive order. In an industry as new and unproven as cryptocurrency, it doesn't take much to drive big swings in price. More generally, new short-term investors who are selling their holdings in reaction to the latest drop may be contributing to the drop in Bitcoin's value, according to a report from Glassnode Insights, a blockchain analysis firm. While fluctuations are expected, you shouldn't be surprised by some of the recent big drops. Is buy the dip a good strategy? The principle of buy the dip is based on an assumption price drops are temporary aberrations that correct themselves over time. Dip buyers hope to exploit dips by buying at a relative discount and reaping the rewards when prices rise again. Crypto markets are volatile, so buying cryptocurrencies at any price, let alone a dip that might become a long-term trend, is risky. While prices could return to previous levels, they could also fall even further, leaving your investment underwater. If the past is prologue, then the current dip could bounce back as it did last year, when prices fell to similar levels before returning to pre-dip levels and even peaking in the autumn. But of course, they might not. Bitcoin prices in particular have shown a degree of seasonality to date, appearing to fall in value to lesser or greater extents in the spring before bouncing back in early summer. However, as with every kind of investment, let alone the unpredictable world of cryptocurrencies, past performance is no guarantee of future results. Expert advice that those committed to buying the dip to decide on a set amount of money they're comfortable with using to buy Bitcoin or Ethereum each month and not to worry too much about what happens to prices over the next 2 years. It's important to diversify your crypto portfolios with different altcoins to mitigate risks. How investors respond will be key to the future of cryptocurrencies. We have already seen panic and despair, with some comparing this crash to a traditional run on the banks. But with bank runs, customers tend to be worried that their bank will be unable to give them their money, rather than worrying that their money has become worthless. A more accurate comparison is with stock market crashes, where investors worry that the stocks and shares they hold may soon be worthless. And so far, reaction to this crypto crash suggests that a large section of crypto holders view their investments in a similar way. Put simply, many will have invested in cryptocurrencies because they believed it would make them richer. This belief has no doubt been shaken. But another motivation for investing in cryptocurrencies may be a belief in their transformational nature, the idea that cryptocurrencies will eventually replace traditional forms of financial exchange. For these investors, any increase in the value of a cryptocurrency is a demonstration of the increasing power of cryptocurrency over traditional money. But likewise, a significant decline in the value of crypto is not simply a monetary loss, it is an ideological one. At the same time, though, this ideological stance creates an investor group far less likely to sell in the face of any sharp fall. And it is this group which may yet provide hope for the sector. In established stock market crashes, we talk of a return to fundamental value. The fundamental value of crypto is frequently assumed to be zero. However, perhaps there is at least some fundamental value which is based on belief. The size of the investor pool who own cryptocurrency because they believe in its long-term future and the promise of a new money may determine that fundamental value of crypto. Indeed, if we consider cryptocurrency investors as different groups with different motivations, we can better understand the behaviors we are seeing. Investors can perhaps take solace that we may have seen the worst of this crash and that better times may be ahead. But like any other markets, nothing is guaranteed. So, do you think Bitcoin will recover after this massive crash? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.